Thank you, Taxmann team, for giving this opportunity to talk about this very important topic. And first of all, good afternoon to all my participants and to the Taxmann team. Uh, Friends, as you know, input tax credit is one of the most important topic in the GST regime. And we believe that till the time GST law is in existence, the litigation on input tax credit will continue. So you can say the GST law and the litigation on input tax credit would always go hand in hand. So wherever there is GST, there would be input tax credit and there would be ITC litigation. So we need to be clear that what are my responsibilities, what are my rights, and where do I stand in terms of my responsibilities so that I do not face any issue in availing input tax credit. And we will discuss some of the judgments which has come recently, which appears to be contradictory to each other. We would also discuss what are the thought process of the government authorities so that we are clear that what is being thought by the government, what are the thought process of the judiciary, and how we need to protect ourselves and our clients so that we do not face unnecessary litigation on this topic. Today we are talking about introduction, eligibility, genuineness of the transactions, what are the departmental clarifications, what happens if the supplier doesn't pay his taxes, what happens if the registration certificate is cancelled, what happens if the department says, many times it says, the supplier is non-existent. So what does it mean by that? We'll discuss all of that and we'll try to answer all the questions in the end of the session. Now, just very, very basic definition of section 16 on your screen, because what it says is any registered person is eligible to take ITC on supply of goods or services which are used or intended to be used in the course or furtherance of business, and of course subject to conditions and restrictions prescribed under the CGST Act. Very simple definition, no ambiguity, nothing. So everybody probably by heart remember this definition by now. We say except for certain goods and services which are there in 17.5, ITC is generally available to registered person on all goods and services. And we all know that. Now, what are the conditions? The condition is that a taxpayer should possess a tax invoice. Details of such invoice debit note should have been furnished in GSTR1 by the supplier and reflected in 2B of the recipient. Goods and services should have been received. ITC is not restricted as per auto-generated. Basically, if the place of supply is not within your state, if it is prohibited, restricted in 75, so on and so forth. Tax charged by the supplier has actually been paid to the government and recipient has furnished GSTR3. Friends, if you see, in a normal course of business, a genuine taxpayer having a genuine transaction would have very little difficulty in complying with these requirements. So generally, these requirements are being complied in the course of business on day-to-day basis. There is no difficulty at all. Only the last but one bullet, tax charged by the supplier has actually been paid to the government. There appears to be some controversy, but otherwise, you cannot say that you would not have a tax invoice. Supply and it is not reflected in 2B. Now the legislation mandate is also there. You cannot take goods input tax credit if the goods and services are not received. If the ITC is not restricted, of course you cannot take. You have to furnish a GST return. So all of that generally people comply with. We read one more section, which is actually at the end, which is section 155. We says any person claiming that he is eligible for input tax credit under the Act, the burden of proving such claim shall lie on that person. And that is where the difficulty arises, because the onus is clearly shifted on the person who is claiming that benefit. This provision is there in section 155, absolutely end of the law, and probably we missed it. Had it been part of 16, part of 17, we probably would have paid more attention to it, but because it's a provision in the law, we have to pay attention, and now it's good that we are talking about it. So the Supreme Court has analyzed a similar provision of Karnataka VAT, and in case of e-com gill coffee trading, this judgment is being discussed very extensively in the professional circle, and I have reproduced the para verbatim for everybody to read, because they say the dealer claiming ITC has to prove beyond doubt the genuineness of actual transaction, beyond doubt the actual transaction, which can be proved by furnishing the name and address of selling dealer, details of the vehicle which has delivered the goods, payment of freight charges, acknowledgement of taking delivery, tax invoice, payment particular, etc. When it says etc., that means these are not the only document. You say, I have given you everything, but Supreme Court says etc. The aforesaid information would be in addition to the tax invoice, particulars of payment, etc. In fact, if a dealer claim input tax credit on purchases, such dealer purchaser shall have to prove and establish the actual physical movement of goods, genuineness of transaction by furnishing the details referred above, and mere production of tax invoices would not be sufficient to claim ITC. The Supreme Court, you can see, has reiterated, he has actually reiterated thrice in the same para. So you can understand how much focus Supreme Court has given about the onus that the dealer claiming input tax credit has to prove beyond doubt. It's a very, very powerful words. And then this judgment was followed by Allahabad High Court in two decisions. Namely, Shiv Trading Company. Allahabad High Court says the petitioner failed to discharge his onus to prove and establish beyond doubt the actual transaction, actual physical movement of goods, as well as genuineness of transaction. And as such, the proceeding rightly been initiated against petitioner under section 74. The recipient here produced tax invoice, e-way bill, payment spirit, guilty, but since supplier was found non-existent, movement was held to be doubtful. This decision was upheld by Supreme Court. And you can see where the courts are going. Again, in Allahabad High Court, in case of Malik Trader, same thing. The onus to be discharged by the petitioner to prove and establish beyond doubt the actual transaction and physical movement of goods. Again, is purchase, produce invoices, payment through banking channel, guilty, etc. Everything has been produced. But still the court says he failed to produce beyond time. The question is, and we can see the above decision categorically held that onus to prove genuineness of the transaction is on the recipient of goods or services. Now, what do you mean by genuineness of the transaction? Okay. If we summarize the court's decision, they say name and address of selling dealer, actual movement of goods, detail of vehicle in which goods have been received, payment of freight charges, acknowledgement of delivery. And because Supreme Court has said, etc., of course, this list cannot be exhaustive. Now, what I want my friends to go back, and this is not a new issue that we are talking about. Many of us in practice would have issued income tax scrutiny where cash credit or unsecured loans have been deposited and been recorded in. Now, income tax officer will ask, tell me who is the loan, who is the unsecured loan holder, what are his credentials, show me his ITR. So all of those details used to be produced. They've been asked by income tax officer, and if the assessee was not able to establish genuineness of the transaction, the ITO used to make addition in this taxable return, taxable income. And those additions have been upheld by the courts, including up to Supreme Court. And you can say somebody is given, I am not able to trace it. Who is going to believe that somebody who is in regular touch with you, you are buying goods and services day on day out from him, and when the tax department asks, you are not able to tell him that this is the name, this is the address, this is the name of the concerned person, this is the mobile number, this is the email ID, this is how we communicate. If we are dealing with them on regular basis, for sure we should be able to establish those transactions. The government says recipient should be able to trace the supplier and also hold him responsible for payment of GST. Let's take a step back and say, we are talking about what? 18% GST here. Tell me, if a supplier does not supply you goods, let's say you order 100 pieces, he supplied 95, only 5% short. Would you sit back and relax? Would you not go after the supplier? Boss, I have paid you for 100. You have supplied only 95. And if he is not responsive, you will not deal with him. And you will in fact tell to the entire market that this is a cheater. For 5% you will do that. Why not for 18%? The question is there in the mindset. When you say that only I have few transactions, sir, I have only 3-4 transactions, and department say, boss, only these 3-4 transactions are in question. Sometimes people say, I have done transaction through a broker. I do not know who is the supplier. And when the inquiry came, neither the broker nor the supplier is reachable. Now, how do you expect government or the judiciary to believe that? If you are in regular transaction, regular course of business, you are dealing with supplier, you would be able to establish contact. You would have hundreds of details of that supplier. You would be able to provide the details required by tax authorities. You would be able to provide the details by judiciary, and you would be able to establish genuineness of the supplier and genuineness of the transaction. Because what we are talking about 18% tax, which is multiple time. Generally, a business, no business in my view earns 18%. A businessman completely focuses on his profit, which is probably 8 to 10%, but is so relaxed about 18%. So I found it hard to believe. In case of a regular supplier, you should be able to establish. And this is how we have to tell our clients also. That one is you are buying goods or services from him. Another is you are getting input tax credit. Tell him, you supplied me goods, I paid you for goods. You supply me credit, I will pay you for credit also. Two different. ITC is a commodity. If he has not supplied you, don't pay him. If he is supplied, if you have paid him, ensure that he supplies you that. So once you are in this mindset, then you have very limited problem. Because you say, boss, I have paid you 100, which includes 82 rupees for this and 18 rupees for GST. Or I have paid you 100 for goods. Give me goods worth 100. When you give me input tax credit of 18, I'll pay you 18 also. You get a 1 month credit, you get 2 month credit. There are credit terms prevailing in the market. Use them to ensure that you get the GST credit as well. Because that is the mindset of the government. And look at the magnitude of transactions happening. Massive amount of frauds have happened. Massive amount of frauds. How do you expect judiciary mind not colored by the volume of fraud? How do you expect government mind is not impacted by the volume of fraud that has been taken place, particularly in case of fake invoices? In my view, I have not come across a single person who has paid full 18% and yet his supplier has not paid tax. There may be few situations where supplier has gone bankrupt, he is insolvent, but nobody become insolvent on day one. In a day, you probably might have not get credit for last month, but you get a statement now on 12th or 14th of every month. You need to reconcile. You need to ensure that he has paid tax. Because once you establish the genuineness of transaction, the genuineness of supplier, and you have made regular efforts to ensure that supplier has paid tax, only then courts can help you. Let's go back little back in time when we used to have a CST regime. At that time, the customer used to give me C form. If the customer were not giving C form, I have to pay 10% tax extra, 10.5% tax extra, plus interest. Okay. Had I argued that my customer, I have no control on my customer, and therefore, if he is not able to give me C form, why should I held responsible? The people have collected C form for ages. The people have deposited C form for ages to the government. And if there were no C form collected, there were appellate proceedings have gone. And people ultimately, if the C form was not available eventually, the people have paid tax. And that has gone for years, decades. In several states, there used to be first point tax. Like in Delhi, we have ST1, where supplier has charged tax similar to the GST regime. He would give one ST1 form to the recipient, so that recipient can show to his tax officer that these are ST1 form. So these are first stage transaction. Do not charge tax on the second and subsequent sale of these transactions. The ST1 regime prevailed for years, for decades. The purchaser used to collect ST1 from the supplier and deposit with the government. The form have been replaced by money. And we say, okay, it is now government's responsibility to collect. Of course, government responsibility. Government cannot shy away from its responsibility. But do I have a zero responsibility? Do I not have a responsibility to ensure, forget as a taxpayer, but as a citizen, how the country will run if we allow these kind of frauds to go uninterrupted? Because we have seen the volume. I was reading in newspaper one day. Somebody on 31st March on a single day issued invoices of thousands of crore. Now, no, he has not supplied material. Whosoever purchased those invoices, definitely a purchase for lesser amount. 18% invoice available for 5%, 4%, 3%, 10%. Clearly, they were not bona fide transactions. So we need to be careful about what we are talking about. Because there are things now with the government which are so easily detectable, so easily traceable, and there is very, very little defense that is available. However, once you have established that, yes, this is the supplier, this is his name, this is number, this is his mobile number, I have been dealing with him for last 7 years, 2 years, 5 years, he has been paying tax regularly. It is only in the last month or last 2 months he has not paid tax. I'm trying him. I'm trying to charge it, ask him to pay tax. Okay. Or sometime what happened? His registration certificate is cancelled or found non-existent. Okay. What happened in those cases? Initially, you may recollect, government has issued a press release on 4th May of 2018, where government says that in case the default in payment of tax by the supplier, the recovery shall be made first from the supplier. And if he is not available, not traceable, or doesn't have any asset, recovery from recipient would be made under exceptional circumstances. That was 4th May 2018, very close to the time when GST was introduced. Nobody anticipated the amount of fake invoicing that used to hit us in the coming months. Now then, we have this flood of fake invoicing, flood of these things, And then government circular of December 22 says that if there is a default in payment of tax, because many people have argued, I do not know whether he has paid tax or not. I have no means. The GSTR 2A, 2B, all of that are not conclusive. The government say, okay, if supplier is saying you he has paid tax, give me a chartered accountant certificate. And we'll accept that. So if you look at what the government is saying now, the government says taxpayers to handle non-payment of GST commercially and not leave it to government legally to handle. They are saying you are buying goods and services from him and you are buying GST also from him. If you paid goods and for services, you have ensured that he supplies you goods and services. If you have paid for GST, you ensure that he pays GST credit to you as well. This is your money. This is your credit. You are fighting for your right in terms of goods and services. You fight for your right of input tax credit as well. This is the thinking of the government. And as of yesterday, I do not think government is changing its stand. So government says you deal with it commercially, you push your supplier, you ensure that supplier deposits tax. And if it doesn't, hold his payment, do not deal with it, make him accountable, make him famous or infamous in the trade, and then claim the input tax credit. So it has to be very clear that what are we talking about? Are we talking about legally? Are we talking about commercially? Because till the time we understand the thought process of the government, we understand the thought process of judiciary, and we understand the various judicial principles, we will not be able to avoid this litigation. It is only once we align our thought process with the authorities, with the judiciary, with the legal, settled legal positions, only then we would be able to get out of this litigation, or rather not to fall trap into this litigation in the first place. And even if we get into this, we can come out of it. So that is my suggestion to you. Get into the mindset of not getting into this litigation. It is not worth it. We are better doing our business rather than getting into this litigation. But we are not saying that you can argue that should I do my business or should I run after input tax credit? Boss, it is 18% of your money. Why will you not run after it? You run after 5% of your profit. So how you can leave 18% of the table? So you have to get into it. Now, the question is, even after all that, supplier still doesn't pay. What do you do? If the supplier doesn't pay, the statutory condition of 16(2)(c) stands violated. That is a statutory condition. If you read with section 155, you could not have discharged, you have failed to discharge your onus. Revenue can seek to deny you credit. Constitutional validity of section 16(2)(c) has been challenged in several high courts. Final verdict is still awaited. But in my personal view, as after Eicher Motor, there have been several decisions which say that input tax credit is not a right, it is a facility. And it is a facility which comes with certain conditions. And that condition has to be complied with if you want to have that facility. So it is very unlikely that 16(2)(c) will be struck off from the law book by the courts. So we have to live with it, and we have to ensure that find ways to comply with 16(2)(c) rather than saying it is not possible, it is ultra virus, I have no fault, I am bona fide. I have to be cautious about that. It is my money. It is not government money. It is my money. Input tax credit is coming to me. It is coming to be by way of his paying to the government. That is fine, but it is coming to me. I have to protect my right. So that is the way one has to look at it. If you look at judicial principles, Several decisions in the VAT regime, including Delhi High Court in Arise India or on-cost merchantising, they said that denial of input tax credit to bona fide purchaser is non-justified, equating bona fide purchaser with those hand-in-glove fraudulent seller violative of Article 14. The Madras High Court in DY Bethel has given the same verdict in GST regime as well. See, the courts are coming with us, no doubt. But are they coming with us where we are wholeheartedly trying to comply with law, or where there is a hint of malpractices and still court would stand with us? Answer is no. Even if there is a slight hint of any malpractice, court will not stand with me. Court will stand with me only when I made a bona fide transaction. He is a regular supplier. I have taken all efforts to ensure that he pays tax to the government, and thereby I get the credit and I use that credit. I have used all tools, GSTR 2A, 2B, transactions are also genuine, duly recorded. I've done all of that. Once I've done all of that and I'm able to establish my bona fide, my steps, then the court will come to my rescue. They will say, he has done all what he has to do. Now it is onus is on you to the revenue. Then catch hold of that supplier. You are not given him policing powers. But you cannot say that he has not paid tax. So what can I do? At the same, still dealing with the same firm, dealing with the firm of his brother or his sister or his wife. So you say, boss, I will not harm my business and I will take input tax credit also. It is government responsibility to catch hold of him and ensure that I am held harmless. That is not going to help you. That is not what the thinking is of the GST Council. That is not what is thinking of the judiciary. So if the person is a cheater, how you can continue working with him? How you can continue dealing with him? If he's a cheater, he's not paying to the government, you should stop dealing with him. And rather you should report him, because it's your money. If it comes to the government, it also becomes public money. But here it is directly my money of 18%. I need to be careful. And once I'm careful enough, then the courts, of course, will come to my rescue. Next point is, sometime happen the registration certificate is cancelled and is cancelled retrospectively. What do I do? The Supreme Court way back in 1998 has said, and very few people, we have not using these judgments. Supreme Court says purchasing dealer is entitled by law to rely on certificate of registration of the selling dealer. When registration certificate was valid during period of transaction, purchasing dealer is entitled to rely. No question, no doubt about it. It's a very, very valid argument. Court will stand with you. But when you have done the earlier steps, when you are able to establish genuineness of the transaction, when you are able to establish genuineness of the supplier, when you are able to establish all other relevant details, and you say, if now the registration certificate is cancelled with retrospective effect, where is my fault? I have done all the due diligence that was required. It may be he might have not filed return for a few months, or on inspection, probably due to some reason his certificate is cancelled. That is not my fault. The court will come to your rescue. But you have to do your work, your onus in the first place. Non-existent suppliers. See, Odisha High Court way back has said the government should take appropriate action against fictitious dealer, as registration now, GST authorities say he is non-existent. And I asked, boss, who has given them registration? How can you give registration to a non-existent dealer? If he is non-existent, he is non-existent. Who has given him registration? How he was in existence at that time, now non-existence? But if the courts say that, can you prove he was in existence when you have done the dealing? If you can say, yes, I can prove, and I can prove by these documents, I have these information, that he was in existence when I have done the dealing. Now he's saying non-existent. Court say nothing doing, boss. You done the due diligence, you have established that he was an existent person when you did the dealing, when the registration certificate was granted. Now the onus is on officers. And in fact, the Odisha High Court has given very beautiful language. I have reproduced verbatim. It's a lovely commentary. He said, we must bring to the notice of the state that registration of dealer is indeed a very serious matter, and officers authorized to grant registration should be very careful. Once a certificate of registration is issued to a person and he becomes a registered dealer, he is entitled to certain benefit under the Act. Certificates granted by the public officer have their value, and people in the commercial field would in normal course accept such certificates to be genuine. The fact that registration has been granted, yet the person holding the certificate is a fictitious one, seems to be contradiction in terms. That's exactly what I'm saying. If the certificate of registration was granted, how the person can now be fictitious? Was it fictitious then, or has it become fictitious now? It could be absconding, but can't be fictitious. A certificate of registration can be granted only when a dealer, apart from being a businessman, satisfies the other requirement prescribed under the law. They ask for Aadhaar, they ask for KYC, they ask for 100 things, and then says, hey, it is non-existent. A registration certificate cannot be granted to a non-existent person. The fact that there have been some person who are labeled by the department as fictitious dealer goes to show that the officers under the Act either collude with dishonest people in the field or fail to exercise due diligence and allow fraud to practice in the commercial field. We need to use this judgment. We need to argue. We need to hold public officer responsible that he was in existence. There was KYC given to you. How can you have not verified? How can the entire onus is on me? What was you doing? Why you sleeping? Whether it is a collusion or negligence, the court says these officers bring disrepute to the state and introduce uncertainty and lack of confidence into a true field of trust. These are very important words. Court says it is high time that the state government institutes appropriate inquiries, takes such steps as are necessary to eliminate fictitious dealers from the field, and also takes strong action against those persons connected with such matters so that there is no recurrence. This was way back, but people have forgotten this decision. We need to bring it to the table time and again, that how can you hold me responsible? Ask for cross-examination of the officer who has granted registration. Ask for cross-examination of the officer who has physically verified that person before they put an onus on you. We need to collectively fight this menace because the genuine taxpayers are facing harassment because of the collusion of certain people. So we need to identify. If we are genuine, we need to identify and we need to bring them out to light. We need to clean out the system. If we are in collusion, we need to be ready to face the heat. Absolutely clear. The law and the judiciary will stand with genuine people. The non-bona fide people in this world, in this time, in this AI technology available with the government, with the judiciary, the courts will not stand with people who are not bona. Also, I firmly believe if you want your business to grow, if you want your business of your clients to grow, and to reach levels where people envy you, you have to get out of all these things. In a growing business, the systems should work, not the people. And if your systems are such that somebody is giving you invoice, you are getting cash, you are buying invoice, is not going to grow your business. It could be a very short term, or if it caught, because the amount of consequences are multiple. Nobody can afford the consequences of getting into this fake invoicing trap. So if he has to grow the business, be on the right side of the law, and the law will come to your rescue. Be alert, be vigilant, and then do what is required. Law will come to your rescue. But if you are not vigilant or you are in collusion, then you should be ready to face the heat. So if I summarize, that onus is on you to establish genuineness of the transaction and genuineness of the person. You need to be clear that it is your money. It is your money of 18%. As you are protecting your supplies, your inward supplies, you would go after the supplier even if he is supplying you 5% less amount, less material, less services. You should be equally vigilant for non-receipt of input tax credit also. Once he has done that, if the authority says you are non-existent, stand to your right, that he was in existence when I did the transaction. You only granted him registration. Use these judgments. You ask for cross-examination. Fight it out. But if you are in collusion, stop it and do business so that we can grow a clean system of GST. The distrust goes away and we are able to kind of be proud of a law-abiding society. Thank you very much. We can now take questions. Let me see. There are 3 in the chat or Q&A. So first, there is a very long query, and it doesn't seem to be strictly with today's session. But let's say marketing company takes land or lease, pay upfront lease premiums, set of infrastructure for marketing non-GST product and GST supplies, such as GST input credit or lease rental. This is kind of an opinion. Can land is an input service for construction of immovable property, and hence proportionate credit is to be disallowed. Complaint and see in the background, the assessor is required to treat the above lease rental lease. Yes, this is a complicated question, and definitely department is arguing. But once you are saying lease rental, the lease rental is a periodic payment. So periodic payment is to be proportionately disallowed with respect to input tax credit, with respect to the exempt supplies. And if these periodic payments are for taxable supplies, then you would be able to get the credit. Now, one says that, sir, unlike goods, how can the rendition of services provided be proved? Commercially, definitely. Now, what are the services which are provided which cannot be proved? Once you provide a service, there are tangible things. It is most of the services. If you are talking about a high value service, there would be a report. If you are talking about architect service, there would be maps. There are things. And once you have a genuine transaction, there would be email, there would be meetings, there would be correspondences, there would be back and forth of the documents of the draft. There would be several transactions in a genuine transaction which would help you to prove. But if it is a one-pager agreement and two-pager report, it clearly shows it is not genuine. So look at your inside and you would be able to see the difference in data in terms of genuine transaction and in terms of fictitious transaction. We have obtained these queries from Manoj. We have obtained GST registration, but construction is under process. Under what circumstances we can avail ITC charged by supply of input capital goods? If it was, see, as per 17.5 C and D, the services and goods for construction of immobile property are not allowed. However, there is a Odisha High Court decision in Safari Retreat where Odisha High Court has held that because these are being used for input tax credit for giving outward taxable supplies, input tax credit should be allowed. The Safari Retreat decision has been challenged by the revenue in the Supreme Court. Supreme Court has conducted extensive hearing on this point for several days, but the judgment is still awaited. And what I suggest, if the construction is going on, avail input tax credit on inputs and capital goods, but do not utilize it. If you avail and if Safari Retreat is in your favor tomorrow, you should be able to take the benefit. And if you do not utilize it, you do not incur any risk of any interest or penalty. So you are protected against an adverse decision and you protect your right in case of a favorable decision as well. Mr. Ashok Jha is asking this question, sir, what happens if the supplier pay GST after November of next year in old GSTR 2A regime, whether GST ITC will be allowed to purchaser? Department is denying credits as file return late. What happened when I return late month? Just due to shortage of whether you have received, whether you have taken this credit in your books of accounts. If you have taken the credit in the books of accounts by 30th November, even if supplier has paid tax later, and if the amount is substantial, you should take the credit and fight with the government. Because there is a thought process which is emerging, which will be decided by Supreme Courts at some point in time, that whether this 30th November deadline is to take credit in the books of accounts or showing in GSTR 3B is a mandatory condition for taking the credit. Now, if the court says, as the court has held in Bharti Airtel, that 2A, 2B are 2A is only for a reference and actual are the books of accounts, then you can say I have taken credit by 30th November in the books of accounts. If the supplier had paid tax subsequently, the condition of 16(2)(c) also stands complied with, and therefore my credit should not be denied. But if you're not taken credit in the books also, then it will be difficult. It will not be available. There are provisions that GST law to waive a penalty under 73(8) for non-payment of tax within 30 days of issue of GSTR, DRC01. In our case, we have paid tax beyond 30 days. No, brother, the 73(8) provisions are very clear. If you pay beyond 30 days, then you are not within 73(8) and the consequences will follow. Can you please provide the citation of Odisha High Court judgment? Sure, we will do that. When you will receive the PPT, I understand that the complete citation was missing. It was a query by Pratima. So once you receive the presentation, you would get the complete citation of all the judgments that we have discussed. Another query from Noch. We have two plants under one GST registration in the same state, but one plant is far away from 30 to 40 kilometers. If supplier mentioned wrong address of the plant in the invoice as well as in the waybill, is there any issue in availing ITC? See, Manoj, there is no issue in availing ITC because ITC is linked to your GST number and GST number for both the plants is the same. So there is no issue as far as ITC is concerned. But I can see you could face issue on the road if the flying squad detects the consignment and that is addressed to plant A, and but it is on the way to plant B, then the authorities intercepting the transaction on the road, they may create an issue and they may ask you to pay penalty and you have to get into a litigation. Of course, this is a defendable issue, but you would have to again then pay the penalty, get the goods released, and then deposit the file the appeal and follow the process. So as far as ITC is concerned, there is no issue. But if you are talking about uh, on the road issue, definitely that issue will be there. Dhruti Shah has asked, sir, with respect to not filing of GST 3B or late filing of GSTR 3B, can this issue be contested? Dhruti, I'm not able to understand your issue. Can you please elaborate that late filing of GSTR 3B? If you are referring to my discussion earlier, where you have taken input tax credit in the books of accounts, but late filed GSTR 3B, I am saying you must contest that. The jury is still out. There is no simple answer to that. But if you have a transaction recorded in the books of accounts, it is only late filing of GSTR 3B. This issue should be contested. And I believe that sometime court will hear this and give us a definitive answer. We have, I guess, a few minutes left. If any more questions, we can take them now, or I can ask the Taxmann team to take one more question has come. Let me take that. Got it, say yes, right. Dhruti Shah, yes, thank you.